Welcome 99 Club members to another update, August 28th. This is a Sunday after the market closed on Friday the 26th. The big news this week, everyone was waiting for what was supposed to be big news, but it wasn't at all as expected. Federal Reserve just didn't say anything, and the market didn't really know what to make of it. But it had some major repercussions on gold, and that's what we're going to look at, as well as a few other things. The market update is on a separate video, but it's kind of neutral right now, looking at holding that support there. And that's not to say individual stocks that we're going to look at now can't go ahead. Let's look first of all at the Make Mum a Millionaire portfolio. I was stopped out of Newmont Mining. As I say, the last weekend I explained how the gold miners had boxed themselves into this tight little corner that was on an intersection between the kind of diagonal trend line and that horizontal step. And I had explained last weekend that was a good entry point, because if it went wrong, the downside you would see pretty quick and you'd be able to get out with not much loss. But upside, it could have been explosive. It could have gone either way. And I said it's definitely going to go down, it's definitely going to go up. The market, the direction it chose was down, and there's the result. So there's the same, that was Royal Gold, Newmont Mining is the same, similar picture with all of them. If I look at the gold miners index, which is the GDX here, to kind of got a big broad picture there of what's going on. Here we see the damage, but to keep that in perspective, I mean, if I look at the weekly chart, this is actually a healthy thing and not bad at all. Look how extended it got. And you have to have these breathers along the way. So what we're, as frustrating as that Newmont Mining one was, if, I was in that one, looking ahead, this is actually perhaps going to shape up to be, the best entry point, maybe the last entry point anyone has of buying gold and gold miners at these sort of prices. There's the metal, there's the gold, that's just gold metal. And I've explained before how there's support at around 125, 1.5, and we're almost there now. So if one was looking at, buying the metal, whether it be through this ETF or physically, we're getting pretty much there now. It's not to say that anything can happen, can't go lower, but from long term, that's certainly a point where I'd be looking at, gathering for retirement portfolio, things like that. A good entry point. But that's something I'll look at trading as and when. If I see this settle around 125.5, 126, and I don't want to catch what's called a falling knife. I don't want to get my fingers chopped off by this falling knife catching. So let's see. I want to see it settled here a little bit. And if so, then I'll be entering that around that 125.5, 126. Just want to see a little bit more support first. Likewise with the miners, the gold miners are sort of look like they could be settling around this 27-ish mark here, which looks, as you can see historically, that might be a step there, and all it's doing is just refueling for the next leg up. So as again, I want to see a little bit more support there. If that happens, I'll be making that a new entry point for gold miners. And the ones I'd seen before, Newmont Mining, Royal Gold, they're looking great after this what is basically a consolidation period in an upward trend. But the mother's portfolio is still in IART. After this weird intraday action here that took it all the way down to previous support at about 82, the closing price is all that matters, and it closed up fine. And that one is still in that, and it's still looking very tidy, and very tidy indeed. It's just looking like an excellent one, and I'm hoping for a big upward spike in this one soon, because notice how it's the end of every month it jumps up a box. We're approaching at the end of the month now, so so that's the only one in the Make Mother portfolio right now, ones that are, or other ones that are in my portfolio still, just to give you examples again of these stepping stocks, is this one's going very well. If you've got that, there's the steps. This is an example, it's not a recommendation, these are just examples. And looks like it's got firmly into that kind of 65 ish 70 box right now. I'm still in that one, going very well indeed. I was in here more like around down here. AMAT, same deal, still in that one. It's going strong. Had a nice gap up recently, and it's holding its ground up there nicely. Also, already showed IART. Another one, MSCX is a utility that's interesting, and this is more like it's in that consolidation thing I've been speaking about. This is very tight support around here, and it's a very sharp upward trending stock. If that looks like support is at 35, if that can hold at 35, that's a very nice entry point for that one. I mean, I could even, he could even be entered now with a tight stop at as close as like 34.5 or 34, something like that, and you can see there that gives you a sensible. If it closes around here, there's something up with that. But that level right there, that's so tidy and tight in what is a very upwards trending stock, as I can see from the weekly chart. You can see that this is behaved very well, and it just got way ahead of itself, and there should be at least a short-term reaction from this as it hits this rising trend and basically catches up with itself. But if nothing else, it could go either way, but that's a very low risk and with plenty of upside, and that's really what the name of the game is here. We're looking for things where, if it goes wrong, you've hardly lost anything, and if it goes well, you can just keep on riding it upwards. Now, what happened with Dicom this week was a bit frustrating. However, it's still holding right on support there at around 82.5, which is quite strong support now. Earnings report came out, which was, we had this action. It took it back to up here, which was just above the entry point. Then earnings came out, which were great earnings, and then it sold off, which was very odd. But that's, again, a bit like the MSCX one we just looked at. Right here is a decent entry point on that one. Anything lower than that though, and I'm out. Close it like 81.5, something like that, and that's bail out on that one. But an odd one, that one. That's just the way it goes sometimes. I'm going to add there's one I'm looking at now, which is Micron Technology. It's got a beautiful stepping action. It looks like it's early days for this one. It's a cheap one, so it's good on good like low margin requirements, and somewhere around at this sort of level here, around sort of this box here, like 15.5, 16.5 is where I'm looking at entering there. There's a few more here that are very interesting, and I've got some price points that I'll be looking at entering at. MKTX, I'd look at, this is a very boxy one. I'm looking at trying catching a ride here between 165 and 166. ACIA, I want to get, this is solid support at around 100, nice round number. It's an exciting stock. I would look to get in there between 100 and 101. PMD, start of what should be a nice boxing stock there. I want to be in there between 20 and 21. HSKA, another one. You'll see a pattern obviously between these. You see that boxing upwards trend. I want to be in this one at 50 to 52. And obviously the stop loss is right below whether you're comfortable. The closing price below what is the support line, below the entry point. 110. Remember that, because midweek I'm not going to be doing lots of updates and so on and things like that. So the entry point I'm talking about, you take the dollar blow, for example, on this one. I'm looking at getting this one between 110 and 11, which means my stop loss is going to be a closing price at like 109, something like that. But it's what you're comfortable with. SODA. 28 to 29, I think, is a good entry point on this one, and that could be the start of something good there. And finally, obviously I'm not going to be able to trade all of these. These are just some entry points I'm looking at, catching on, see which ones, but they're all great, and if I can enter at these levels, then that will be a nice ride. 157 to 158 on that one. Now here's the other thing, if I can see, I'm looking at entering on the closing price. If this thing looks like, oh great, it's going down, and it's at 155, then that's no longer of interest me, because it's doing something weird. It has to be maintaining above that level. So if I'm catching a ride, but okay, great, I'm in at 157, but now unless that's the last few minutes of the trading day, or looking at the closing price, that's not, if it keeps going down during the intraday price, that doesn't count. I want to enter only at those prices, and the only way I'd enter at all is in the last few minutes of the trading day, when I can clearly see that's where it's going to stay, or the very next day after a closing price I can see. Having said that, then the very next day, if I enter the trade and it's good, it's at 157, I'm still going to watch to see what's happening, because if this thing's really pushing down and it's looking like it's going to be a bad day, then then I'm going to be watching. I'm not going to just jump in regardless. Very often you'll see, look, I see that this closed at my target price today. The next day I'll go in and bugger, it's opened up, or it's, the ideal scenario, of course, is that it's level right at where you left it at the day before. And but more likely though, the next day it could just be rising. I'm just going to have to dive in and catch a ride, as long as it hasn't completely run away with me. And very often I find that the best stocks have, look, I've just got to jump on. It's not the ideal entry price, the lowest possible entry price, but I've just got to be on board that stock. And that happened with WB recently. One thing I commented on, I told you I was in around here that weekend, and I could see, look, here was the ideal entry point, somewhere around here, but look, it just this stock's moving. I've just got to get in on this, and there was the end result, and it's still going strong. So which is another one which is obviously I have traded and still am in with. That's just a little bit of education to go with that, and that's why trading in the last few minutes of the trading day isn't a bad trick, but not everyone isn't a bad idea, but not everyone can do that. So that's I'll leave things for now. Leave you with the chart of IART, which is currently the sole stock in the Make My Millionaire portfolio. I think it's still looking good, and speak to you next time.